Welcome back. Well, we listed down all the top stocks that you need to track, but let's get some fundamental analysis going as well. Dipan Mehta of Elixir Equities joins us on the show. Hi, Dipan. Good morning and good to see you in as always. I wanted your view on Mahindra and Mahindra. Yesterday, the numbers didn't look so bad. The problem is that the tractor industry itself is going to go into a bit of a tailspin, it appears so. And normally, I've seen in the past, in election year, we see tractor volumes peak out. So what's your view on the stock from here on? It's been a big outperformer if I look at it over the last 18 months. But now this tractor degrowth, industry for the industry itself will put a bit of a hurdle.
Good morning, Najil, and thank you for having me on your show. I understand that tractors industry is cyclical, but there's a ray of hope. I think if you look at all the weathermen, they are predicting a very good normal monsoon this year, and that certainly can boost tractor sales. So this tractor softness can be for 2 or 3 quarters or so. And eventually it does come back. I mean, India really requires more tractors. Per capita tractor sales are significantly lower than the global averages. And from that point of view, I think it's a matter of time before farm equipment also starts to contribute significantly as it has been doing so. But in the meantime, I think the auto industry, the auto business is doing really well for them. And the new models have been very well received. There's still adequate booking demand for these new models. And from that point of view, I think earnings can be sustained for at least 2-3 more years for M&M, and valuations are quite reasonable. From that point of view, we have a positive view on M&M.
Okay, let's not forget that the tractor industry had a long upcycle, right? From FY17 all the way to FY23, it was a 10% compounded growth rate in 7 years. So as you said, I mean, it's a cyclical story. At some point, the cycle has to come off. And maybe this is it. But Dipan, I wanted your thoughts also on what's happening with Reliance. It's clearly become the leader of the market now. There was large delivery buying yesterday of 1,500 crores in the stock. Do you think there's more upside here? And what is leading to this up move in the stock, you think?
Good morning, Sonia. I think it's all to do with FII buying. We have been saying for a long time that the FIIs have not been buying enough of India. So much of positivity there on the India story. But you're wondering why the money is not coming in as yet. And now I think whatever fund flow is coming in the FI side, they are looking at buying into Reliance because that's the large cap stock. It's liquid. They can quickly, get the position and the allocation which they want. So Reliance clearly benefiting from that. And the numbers were pretty much decent. The only question which remains is whether demerger is going to take place amongst all the divisions or whether Reliance becomes a holding company. And we have IPO for Jio as well as for Reliance Retail. So that question remains unanswered. But nonetheless, I think value is gradually getting created in the present entity. And mostly, I think it is technicals and a lot of liquidity coming into the stock.
Dipan, hi, good morning. The other one is State Bank of India, right? The almost 15 months of consolidation for State Bank of India. And then last Thursday, it kind of saw a move. It's followed up on Friday and this week as well. A largest contributor to Nifty Bank, etc. But from someone who's looking at this one, Motilal, for example, this morning has got a note out on SBI. And they're saying they estimate a 22% CAGR in earnings over 24 and 26. What's your sense here on State Bank of India? Do you think meaningful money can be made buying here at these levels?
Good morning, Prashant. Yes, I think so. I think, again, the valuations of State Bank of India because of its consolidation have softened up and you could make a case out for higher price to earnings, price to book for SBI. That certainly can get re-rated, but I was not happy with the numbers which came through from SBI. And that's true for across the board, I think, in the banking industry. I think the pre-provisioning profits have been pretty much flat or low single digit or so. And a lot of the gains in the net profit have come through lower provisioning costs. And once the base effect starts to catch up for lower provisioning costs, then you will see the impact on the net profits as well. That also will start to slow down. So just that caution is there as far as, banking profits are concerned. And, this particular argument which you made for SBI holds true for, I think, entire banking sector, be it HDFC Bank or ICICI, Axis, IndusInd Bank, IDFC First, all of these have gone nowhere in terms of returns for the past several months, if not quarters. And, once you have the banking industry starting to revive, and that may happen when liquidity concerns ease, and there's less pressure on net interest margin, I think across the board, you will see rally in bank shares and re-rating is possible over there and amongst the other stocks as well.
Dipan, I wanted your thoughts on SBI, which has been the big mover in the last many days. There was, large delivery-based buying yesterday. Motilal Oswal has a note where they have a target price of 860, and they say the best is yet to come in terms of earnings. Do you think there's still more traction on the upside here?
Yeah, Sonia, absolutely. And that's true for a lot of the banking stocks. I think it's not just SBI which has underperformed. ICICI Bank, HDFC Bank, IndusInd, IDFC, I think they all have been big underperformers in the market. And once you see the banking industry revive, I think the big players, of course, will benefit per se. With SBI and HDFC Bank, I think there's a scope for re-rating of the price to book, price to earnings multiple. And once, we have this liquidity constraints gradually easing out, we may see a better sentiment for the banks per se. But one thing you have to note that for the December quarter, the pre-provisioning profit for a lot of banks was pretty much flat to low single digit. And the net profit gains came from lower provisioning, and that cannot last, very much into the future. You need to have higher deposit growth, higher net interest income, and higher pre-provisioning profits for the industry to, kind of drive forward. So from that point of view, I think maybe a couple of quarters, there may be still some stress on the earnings, but of course, medium to long-term prospects are great for the banking industry and SBI in particular.
Okay. All right. Dipan, thanks a lot, Dipan, for joining in and giving us your view on a whole host of stocks. We look forward to having a chat with you.